Good morning, everyone. Sound check 1 2 3 1 2 3. If you can hear me, I would greatly appreciate it if you can type in the chat box. So we are live. My name is Josip Kosik. Welcome to Trading Options Live at tradewithufos.com, tradingwithunfilledorders.com. We're not financial advisors, and we do not provide any financial advice. Please take a moment to read the disclaimer as it's being highlighted, even if you need to stop to do that. Let me show you the place where you can get in touch with me. Right here is an email address where you can email me if you have any question about anything that we are covering this morning. And also we have a website that I always use to post the trades that we place in this session. So it's tradewithunfilledorders.com/Josip. If you scroll it down, there are the live session notes from a last session that I did on a September 16. It was a bear put spread and a bear call spread, each of them paying for each other with maximum point and maximum risk explained. So again, that's all on tradingwithufos.com/Josip. So good morning, Mark. Thank you for confirming. And we're going to start by going over the few things today. The first thing that I want to share with you is agenda. So agenda for today is going to be preparation for a Fed day, which is tomorrow, right? So we're going to have a trade selection after I explain Fed day historical reviews. So you should buckle yourself up because there's going to be a lot of information that is going to be thrown at you in such a short period of time. But the one thing for sure, it's going to be extremely valuable. So without looking at the market, which is, by the way, dancing all over the place, the dotted line represents where we actually closed on Monday, and a current price right now is no longer going lower, but it's reversing. We have a majority, with exception of Apple, sea of redness, and we don't know what is going to happen tomorrow. But the one thing that we do have, that is the statistical data of what the price action has done in the past. So let me just show you again. What do we have here? We have a S&P 500 on the 5 minutes that is showing the red UFOs pretty much at the opening of the session, and green UFOs bouncing off this level that is around psychological number of the 3850. So it's interesting, when we came to 3850, we kind of reverse and start going back. Well, this is all nice and dandy. The question becomes, what are we going to do when it comes to tomorrow? Because tomorrow is a big Fed day, and it's going to be most likely a huge volatility. What kind of trade do we pick? Good morning, Jeff. Good to see you. So one of the things that I have chosen to do is go on forexfactory.com, and on a Forex Factory, I'm going to bring the Forex Factory right now. On a Forex Factory, we have a calendar, and I'm going to bring it in right here. And we have a upcoming Wednesday. So today, 20th, there's no major economic announcement. But tomorrow, on the 21st, we should expect the fireworks. Because as you can see in this area right here that I'm putting the rectangle on, federal funds rates are expected to go up. But we also have this graph that not too many people decide to click on. So while preparing for this lesson, I decided to track all these 2022 Fed dates. So obviously, this was the one that is most recent, in July. Then before that, we had in June. Then we had the one in May. Then we had the one in March. So we had nothing in April, and then we had the one in January. And it's interesting, in January, we weren't really doing much of anything, but there was always volatility in the market. So, what my plan is to do this morning, I'm going to do the Fed Day historical review till we arrive at the conclusion what kind of trade selection we're going to do. So, if this is clear to everybody, I'm going to proceed with that and expect the trade is going to get executed at the tail end once when I lay down the case for the trade that we're going to do. And really, the execution, as you know, in the past, it takes only several clicks, right? But arriving at that decision, it's time consuming. So first thing that I'm going to do, I'm going to point out to you here on the Forex Factory that we had in July increase in interest rate. So how do we find this out? Well, first of all, we're going to close this little box that has opened up that thing. We're going to scroll it up here, and we're going to go back in time to July. So when we get to the July, the exact day when that happened was July, and I need to get to the right year. Obviously I have jumped to the wrong year. So this is 20. We need to go back to July 21st. And what I'm going to do here, I'm going to cut and paste the actual information of that particular day. So as you can see right here, I have cut and pasted from the Forex Factory. July 27th was the day when interest rate got increased, right? And that's all nice and dandy, but the biggest thing is that we need to know whether or not what the market has done on that particular day. What the market has done on that particular day. So I have a here snapshot on that same day. As you can see right here, I'm going to put a rectangle. It was a Wednesday. It was a July 27th. And S&P 500 has moved that particular day around 102 points. Now notice I'm pointing out to you here that there was a gap before that. So had we known that they're going to increase the interest rate from 1.75 to 2.5, we would have not expected the market to rally, but the market has rallied. Now I want your eyes to really open up and to notice that exact time when that has happened, which was, by the way, Eastern Standard Time at 11. Eastern Standard Time at 11, that event happened. So going into that announcement, the market was pretty much flat, not counting the fact that it has gapped up, and it has gapped up for all the majors. On a NASDAQ, obviously on a Dow Jones, we don't have a Russell 2000 here, but I do have in mind, after I place the trade with you on S&P 500 for this coming Wednesday, if we have a time, I would like to also place the trade on Russell, although I don't have on the FinViz information about Russell, right? That's the one information, right? So that's the information for July 27th. So going back to the forexfactory.com, I'm going to click this thing again, right? So this was that July. And over here, if we move this to the present time, because obviously this is now skewed, right? So this would be the July. This would be the June. So the orange line shows what was anticipated, and the blue line is what they actually did, right? So let me pull up the stats, what has happened actually on that particular June, and to be exact, that was a June 15. So I'm going to just tuck this away, and I'm going to now look at the June 15, which was the Fed day, okay? So June 15, Fed days is the second one going back that we're examining. And just like I have done this earlier, that I have pulled up the information of what was happening, I'm now pulling up the again information of what was happening from forexfactory.com on that day, which was June 15th. And now notice, if you would just take a moment, they were anticipating that increase is going to be only half from what originally was. But they jacked it up 0.75%, which is a reason that on a Forex Factory, this yellow line, it's at 1.5%, but this goes at 1.7. Now you might say, like, okay, this is all interesting information, but how do I apply this to my trading? Well, this is a beautiful thing that I want to point out to you. I have cut and pasted from that particular day, and again, I'm putting the circle exactly there so you can see that this is a June 15th. June 15th. Market has rallied 54 points. So let's now go back to the trade selection and explain what I'm doing here. I want to look at historically what the market has done and how much has market do move on an average move. Okay, so if you know that basically on a 727 S&P has rallied 102 points. On a 615, and I'm going to scroll it down, it has rallied 54 points. And again, I'm not putting anything in negative because I'm just writing down what it is. We have a conclusion that tomorrow, right? Tomorrow is a Fed day. 9/21 is a Fed day. Okay, so if you know that it's a Fed day, we also know the stock market is going to move. I'm now answering just one question. How much is it going to move? Based on just two pieces of data, I don't have enough information. I need to look further out in time and see what has happened also on the May 4th. And I'll try to do this as fast and as efficient as I could so I don't waste too much of your time. So you see over here in June, they did more than what they expected. May, they said they're going to increase from the half to a whole point, and they did. So there was no variation whatsoever. So the May 4th was also the Wednesday. Somehow the middle of the week is their favorite time of the day. And they also did the increase. And I'm going to just take a snapshot here quickly of the FinViz. You can track that on your own. You would just need to go back in time to the May, again, 11 o'clock. And as you're seeing here, the pattern is always the same. So tomorrow, if you're trading, please do not expect too much of the activity till what time? Till actually 11 o'clock Eastern time, which is for us around the 2 o'clock. Around the 2 o'clock. That's in California because we are 3 hours different. So again, they were expecting it that they're gonna increase the interest rate from 1.5 to 1, and they have exactly done that. Now the question becomes, how did the market react? So without you searching back on over here and going back down in time and trying to locate that particular day and seeing it, what I have done, I've actually taken a snapshot of the FinViz, and I'm going to just dump it in just like I dump it in over here and show it to you. Shockingly, it has rallied on an increase of the interest rate. When everybody assuming they're going to increase the interest rate, market is going to go down, it has rallied basically 125 points on that day. On that day. So what are you seeing so far as a pattern based just on this first three pieces of information? What you're seeing so far is that the market every single day when they had the announcement did not go down. It had gone up anywhere between the 50 to about 100, even 125 points. But that is not enough data for us to conclude what we're going to do, right? Because this is just an increase in July, increase in June, increase in May. We didn't have anything in April. We had something in March. And it was in March that this whole thing started. It was in the March that this whole thing started. So what I would like to do right now, I would like to investigate what did the thing do in March, because the March was also the Fed day. And as you know, on a March was the first time ever since the COVID that Fed has decided to do their job. And their job was to actually increase the interest rates, right? And they have increased it from the half, from 0.25 to a half, right? And there was supposed to be no shock to the market, right? Because this everybody knew this was coming and all this type of thing. And I want to show you one more time so you kind of like sit deeper in your chair, as you realize what has happened. I mixed this up a little bit. I'm sorry. This was on top and this is on the bottom. But the bottom line is this. This is the bottom line. Okay. Did we again go up on March 16th? March 16th. Again, when the announcement came, what was the first initial reaction? Up or down? It was down. It came down on a Dow. It closed the gap. On a Nasdaq, it didn't, but Nasdaq is a different beast because that's a sector that's not really a market. And then it had ripped to the upside, which is a little bit different than other places. Over places like back in May, it didn't do that. It breathed down and then it went straight up. So again, what do we have here? We have a move of almost like $100 when on a March 16. So on the March 16, we have a $95 move. So what I'm actually now already coming up is decision that most likely I can do trade selection that is going to be a long iron Condor. And why do I say long iron Condor? Because I don't know if this particular time they're gonna do what they said they're gonna do, or if they're gonna jack it up more than what is expected. So they're expecting it 0.75%. But there's already a talk that they should increase the whole percent. If they increase the whole percent, could it be that my statistic that I have piled up here, which is just based on 4 points of data, and every one of them is positive, is wrong? Because that particular day when you expect you should go bullish, that it goes down. That's why I want to consider the long iron Condor. If this is making sense, please type in something in the chat box while I go and check one more Fed day. And this is pretty much where I'm going to draw the line. And I'm not going to do anything beyond that one. Okay. So this is the Fed day at the beginning of the year when they didn't do anything. So that means Fed have not done their job, okay? And because they haven't done their job, the stock market has construed that as bearish, and it has moved. So if you're looking here one more time, up to the 11 o'clock, what was the price action doing? Nothing. Well, it had a little bit of morning volatility, but that's expected. But then exactly at 2 o'clock, which is 11 o'clock New York time, 2 o'clock, we had the firework, right? And that firework went where? Down. On what news? On them doing nothing, because they just kept the rate flat. So we know that no matter what, on January 26th, the market has moved, and it has moved down in a negative. And now be aware of it. Do not think that this is just a $6 move. Because if you think this is just a $6 move, you need to know that this is calculating from the open to where the price closed. you should actually calculate from this level right here. So what would be here in the middle? So we would probably 25 all the way to, let's say, 50. So that would be 75 points into the negative on that day. Do not get skewed here, because we had a gap up and then we lost everything and then we went lower. So we know that on average, even on the worst possible days, the market moves 50. So conclusion, SPX will move either 50 up or down or more. Okay? So I know this is kind of crazy. So what can we do? Here's the answer. Long iron condor. So what I'm planning to do is, for the remainder of the lesson, I'm planning to create iron condor on the SPX, and if the time remains, iron condor on the right. Okay, so that's my plan. So Jeff, Mark, I think you're good. And if you are, then I'm gonna show you one more time what the market is doing here, so you don't think we are missing what the price action is of the current market. Nothing. It rallied up, it never took out the open, and now it's pausing because we're going into lunchtime. We're going into lunchtime. So you shouldn't expect too much of anything today, because just like I did this lesson for you, focusing only on a Fed day, only on a Fed day, only on a Fed day, you can also take a look. What did the price action do 2 days before the Fed day? And you would notice it was a quiet before the storm, quiet before the storm, quiet before the storm. And then when did the storm hit? The storm actually hit exactly at 11 o'clock. Exactly at 11 o'clock. So on a January, when they didn't do their job, the stock market construed that as a negative, and S&P has lost in one single day 75 points. On March, when they did their job, stock market construed that as a positive, it rallied almost 100 points. On May 4th, it rallied more than 100. On June, it rallied only 50. And the most recent one was about 100. So I'm going to have an iron condor that it's going to be quite similar to the one that we have done. If I'm not mistaken, I would need to go back in past and see exactly when did we do the iron condor. I believe it was this one on July 30th. At the time of the entry, S&P was sitting at 340. We decided to look at it up or down X amount, and then we went ahead and created this long iron condor, anticipating that it's going to go either up or down. Okay, so that's the same logic that we are doing now. So what do we need to now take into account? Well, right now we need to take into account that S&P is sitting at 3860. So when I start building this iron condor that is going to be long, maybe I should put the long iron condor. So we're going to have a call side and we're going to have a put side. And I want to make sure that we are clear where the S&P is. So SPX is currently at 3860 plus minus, right? So if I anticipate that it's gonna go up, could I be then buying, let's say, 387 and maybe targeting just 5 points higher, 3875. That's mean I just expect S&P 500 to move only 10 points. Only 10 points. So why do I expect the 10 points? Well, I expect the 10 points because we are now at 38.60. But you need this to go up 15 points. Yes, because if this is up 15 points, then this would be $5 in the money. This would be then $5 in the money. How about on the downside? Let's talk about the downside. Could it be that I expect to buy, and by the way, I should put here word C and C so there's no confusion, because this is a call side here, and this would be the put side here. So we're now talking about the put side. That S&P might go from 38.50 to 38.45. That's what we are expecting. So having said that, I'm going to now jump on my platform. So here I'm on the platform. As you can see, caret sign SPX represents the S&P 500. I'm going to now pull up the option chain. And when I pull up the option chain, I'm going to go over here and I'm going to select the, well, of course it's going to say long item Condor, but I'm going to edit that because I don't want to what they give me. They're giving me right now October, and I'm looking for a September. So nicely, everything lines up for a September. Everything lines up for a September. So one more time, I just want to make sure that you guys don't lose me what I'm trying to do here. What I'm trying to do here is enter these numbers into this and see if I can come up with a premium around $4 plus minus. If I have a $4 debit, then my maximum profit is $1. And I really don't even pay attention to what the market is doing. Why? Because historically, having moved 15 points either up or down based on the historical data of this particular year, even on a lowest movement, it was 50 points. If you like this trade, type it in yes. If not, say no, then I can move on to the Russell. But basically, what I'm doing right now while I'm waiting for Jeff and Mark and whoever is attending here to interact with me, I'm changing now the put prices to 38.45. That's the downside target. I'm buying the 38.50. That's my long unit. So obviously, if I'm buying 38.50, I'm risking only $5 here. I'm also buying 38.70 and selling on the top side 38.75. This is exactly what I spell out I'm going to do, and this is what I'm doing. So now when I click OK, this thing is going to calculate for me, and I think they jacked up the volatility slightly. This is a little bit more than what I wanted. And why do I say that? Because it doesn't give me the rich premium as I want. It does not give me a rich premium as I want. I was expecting that it's going to be $4, and what did they give me? $4 and a what? 55. That's mean my maximum profit, it's only 45 cents, right? I kind of don't trust those numbers because the skew is so big between the bid and ask. So what I'm going to do right now, I'm going to log into my Thinkorswim account and I'm going to fire the trade in, and then I'll actually alter these prices with the filled information. So if you can just give me a second here, as soon as Thinkorswim populates here, I'm going to select the account that is clean, that I don't have anything in it. Over here I have something, so let's pick the margin. Yeah, so this margin account has a $5,000 in it. As you can see right here, I'm going to put the rectangle around it. And we are going to now open up tomorrow. Let me bring those numbers in again. So what we are doing here is looking at these strike prices, and these strike prices are. I need to change this into SPX. So here's SPX. As soon as it loads up, so we're not looking at today's expiry, we're looking at tomorrow's expiry. We can actually have a less numbers here. And we said we're buying the 50 and selling the 45. So buy 50, sell 45. That's already 215 on this side. And then on this side, we said we're going to be buying the 70 and doing the 75. 430. Okay, let's see if I'm going to get filled. Firing in. 1 Mississippi, 2 Mississippi, bingo. I actually got filled on that. This is very good. I'm wondering how would be the live trade on this, but I'm not going to test this right now. We still have a lot of time to do it. Okay, so on this one, it turned out to be that we got filled for the 370 debit. So if we got filled for a 370 debit, that's mean my maximum profit can be 130. 130. On a trade that I can just place and forget about it. And I'm accepting the fact that I could lose 370 because that 370 is a debit. Let's now work out the, not the exits, but the expiry. Okay, so let's now talk about the expiry down. Okay, if you have an expiry down, what is going to happen with my bear call side? I mean, not the bear call side, bull call side. My bull call side, in that case, if it close down, my bull call is worth 0. My bear put, the answer is depends. Because if we close at, let's say, 38.46, okay? If we close at 38.46, then how much is my put worth? Well, you subtract, then your put is worth $4. And what do we pay for it? $3.70. So I'm still up the difference of the 30 cents, right? But what about if we close at 44? Then what did I make? $1.30. How did I make $1.30? Well, my bull call is still worth 0. This, if you're down at, and let me now just put this in a highlighted area so it will become more obvious to you. If you're now at 44, then would this not be in the money? And would this not be in the money? So if both of them are in the money, then I'm at the maximum profit. What's the maximum profit? 5. But wait, I didn't pay 5 for it. I paid for it what? $3.70. So then what did I make? $1.30. Now, you will be surprised now if I move to the expiry up, how the things are going to work. Okay, in that case, my bull call would be at the maximum profit. Now, again, it would be only on a maximum profit if it closes above 38.75. Then we're talking about the max and a lot of SP. Okay? Bear put, in that case would be 0. Why would the bear put be 0? Because the market did not go up. The market has gone where? Down. I want to now do the iron condor on the rut, and you're going to get surprised because iron condor on the rut, in my opinion, it's juicier. And the reason why I'm saying it's juicier, for simple reason that it doesn't go in a 5 cents increments. It goes in a single penny increments on a premium, and you're going to see that in a moment. So let's build it more slowly. Iron Condor on RUT than what we did on S&P. On S&P, I kind of rushed it too much, so I'm going to slow down over here, and I'm going to build it really, really slowly here. So let me just one more time work through this. So we're going to have a bull call side here, and over here we're going to have a bear put side here. And we need to now figure out exactly where the rut is at this point in time. So the rut right now, and since we have done the S&P like 6 minutes ago, it's still sitting here at 38.60. If I bring the real time FinViz, we're in a lunch hour. These are the 10-minute bars, 10, 20, 30, 40. For a 40 minutes, what do you think the market has done? Nothing. That's what you should be expecting, that it's going to happen tomorrow going into the earnings. There's going to be solid 2 hours that you should crack a book open and read without ever glancing at the market, because historically nothing happens going into it. Nothing happens going into it. Nothing happens going into it. And you can see that over and over and over again. Like, look at this. That particular day in July, you would be probably going nuts if you were looking at the market for the first several hours. It would be like watching the paint dry on a wall or watching the grass grow. Nothing, nothing, nothing. Doesn't matter which market you were looking at. I'm looking at the Apple. It doesn't matter if you're looking at the Apple. Apple is part of the, oh, it took a breather and then it came right back down. So 11 o'clock, that's when the fireworks starts, right? So let's now build the Russell. And how are we going to build the Russell? Well, notice over here, I'm anticipating 15 points up. And over here, I'm anticipating when you take a 60, subtract 45, it's a 15 points down. Do not use the same 15 points for a Dow, because Dow, not a Dow, for the Russell, because the RUT is a different beast. RUT is a beast that it's currently trading at, let's type it in, $17.90. Okay, so if you know that it's here sitting at $17.90, how about if I anticipate, and check this out, I'm going to say that and it's going to sound so absurd that it's going to move the 5 points higher. You think that's realistic? You think like I'm lying? You don't think that the Russell can move 5 points up? Just 5 points up. 5 points up. So what are we going to do then? We're going to be buying 17.95, and we're going to be targeting the round number, which is going to be the 18. So both of these are the call sign. So let's fire this independently. So I'm looking here. They have only September 24th because they don't have a Tuesday options, as you can see here. No Tuesday options, but they have a Wednesday option. So I'm looking right here, 95 and 1,800. So if I go ahead and buy this right now as a vertical, that's 230. I'm waiting. I'm giving them 235 and they don't want to give it to me. You know what? Forget it. Let me fire it as a one ticket with all the legs. That's going to give me an advantage. Let's discuss to the downside. So I'm going to be looking at 5 points down. And that means I'm looking at buying 1785p and then selling 1780p. Okay? And if on one side is 230, and let's assume the other side is also 230, that would be 460. So if my whole debit is 460, then my maximum profit would be only what? 40. But when you really look at that, like that's almost like a 10%. That's almost 10%. We are not done executing this because these two numbers added together are giving you 5. So let's do this. Let's do this now together. We're opening it up. 85 and 80 is what we are buying. And on this side, we said 1795 is what we are selling. So let's make, okay, so this is sold and this is sold. 445, 440. Oh, that would be wonderful if they give me 440. So the moment you send it in, this thing moves. Now it says a 450. Now it says a 445. I'm pausing here not for effect, but I'm pausing here for a fill. And if they don't give it to me, I'm gonna just give them that 1 penny higher. This is what I was talking to you. Let's see if that 1 penny higher is changing anything. Well, it does. It would then make my profit of $59 and my maximum loss would be 441. Guess what? Patience paid off because I got filled at what? 430. Yes, this is a beautiful thing. Now I can take a time and work this number with you slowly, and then later on post it in Tradactive Excel sheet that you all have access to. So let me just make sure that I have this information and I can tuck away the whole thing. So I'm taking the picture of this information. And now that I have that, I can just simply dump it in and explain all the fine pieces about it. So I'll start with S&P for a simple reason that we're done with S&P, right? So we have S&P right here. Now we know which prices we got filled and everything about it. Okay, so the S&P that we just placed on the call side, my filled price, and I'm gonna do this a little bit faster, for a 45 was at $30.60. That right there would be $3,060. Just think about it. But 38.50 was at 32.10, which would be $3,210. And you're so lucky you're trading this with $5 spread. So you have that as a spread. Let's go filled price for the 70 was the 34.70, and for the 38.75 we got 32.50. So when I click now OK, it spits out exactly what we had here. So we had a long iron condor for the 370. Okay, I'm going to make sure that I put this inside of my Word document so later on when I'm working with you on reevaluating these trades, I know that this is not the correct number. So I'm going to delete this. This is the correct number. So 370 right here where the arrow is pointing out. So now next thing that I'm doing now, I'm actually clicking the risk graph. The risk graph is going to show me that I can make a profit of the $1.30. Let me just make sure that I take also a snapshot of that. So here it is. Just 1 second. Print screen. So here's my long iron Condor. I can lose a 370. I can lose a 370 on it, right? Like we pointed out here. But at the same time, my maximum profit is $1.30. So let's now stop and think about this, right? If you're making $130 on an investment of the 370, and we're talking about in a single day, that is a 35% rate of return. But the bad thing is, do not assume that you can do that every single day. How frequently can you do it? Well, I would say about every 2 months, not counting April. We didn't have anything in April. So, May, you had here. June, you had the July. You didn't have anything in August. You had in September. So just be aware of it. This is a type of trade that you place it and forget it. You accept the fact that 370 is just out there. Now let's just say today was that day. Today was that day. And the S&P has moved 40 points. 40 points. What do you need to move on S&P on a Fed day? You only needed to move either 15 points up or the 15 points down. But if today, day before the Fed, we moved 39, isn't there a high chance that we're going to move tomorrow when they come with the pistols blazing more than 15 points up and down? And that's why I feel confident enough to say, you know what, let's also hit the rut. Let's also hit the rut. So I'm going to take a snapshot of this and point out to you the distance from here to here is $3.70, right? Of the possible loss. But the distance, and let me just change this into a green color, it's only 130. 130. So as long as the price action either goes up anywhere in this area, which yesterday was a lot of activity around the 3900, or will fall anywhere below 3845, we're making money. Only place where we are not making money is right here if we stayed peace and quiet. Peace and quiet right here. And there's a high chance that there's not going to be peace and quiet on that particular day. That there's a very high chance we're going to be either going where? Up, or we're going to go where? Down. So let me take a snapshot of this so it's kind of like visible. And I'm going to just put that in my Word document, whether or not I'm going to put it in my Excel sheet there. It's really not certain. So one more time, when I go over here to my live trading notes, you see the similarity of what we did back in July. It's the same kind of trade. It's the same kind of trade. If you want to rewatch the July, that would be good. Okay, I'm done with with this. Now I can look at the rut. So let me just type in rut. See if we get the data feed on the rut. RUT. Okay, so we're getting the RUT. It's still sitting at 1790. Same approach. Edit the spread. Let me just make sure that I show you one more time what the numbers are. So I expect it to go either 5 points higher or to go 5 points lower. I really don't have a preference no matter which way it goes. I expected, and a rut can move more than 5 points. There's high chance that it would move. So the call side is already done correctly. 1795 selling the 1800 even. We just need to work on the bottom part. The bottom part needs to be pushed down to the 80, and this needs to be changed to 85. And then when we click OK, this thing spits out 485, but we know that's incorrect. And the reason why I'm saying incorrect, because did we not go ahead and fire the trade in and already got filled? So we already went in and we got filled on a rut for these values. So iron condor on the rut, 1795 for 1830. So let me just now type all these things in and make sure that everything is correct there. So filled price on a 18 is $16 even. On the 1795, they want 18 point, what is that? 3. Okay. Then on 1785, they also want 18.3, which is interesting. 18.3, and then on the top one they want a 16.3. 16.3. Click OK. $4.30. That's what we got. $4.30. And let me make sure that I put that in here. And then everything is done. Oops, I'm sorry about that. That's the one that I just did a few minutes ago for S&P. So I'm going to just delete that one. I'm going to delete that one and quickly get this information and fire it in as a document. Risk to reward graph. It shows, there's one more level that I want to talk to you about in a moment here. If you could just bear with me. So let me just get this here. One thing that we didn't talk yet over here is that here I'm making the $70 and I'm risking 430. Okay, so let's now look at it. On the S&P, we got a nice rate of return of the 35%. But if I have a $70 and I'm risking 430, okay, that's a rate of return of the 16%. So obviously the rut is giving me 16% rate of return, while the SPX is giving me 35. Liquidity. That is the reason why you have this kind of activity. Because if I now go back and show you just that particular option in terms of the liquidity, you would be really surprised. You would be really surprised. So let me now pick only September 21st for a rut. That's what we are looking for. The strike price 1800. Volume. Look how small this volume is. Okay, so I'm showing you here both open interest and these 56 contracts today traded on the top of the 23. Even when you add this up, that's not even $100. Same thing over here, 45 plus 24. I'm done evaluating the call side. I want to now evaluate the put side. The put side legs that we looked at was 1785 and 1780. So one more time, I'm going to put a rectangle around those numbers. 1785 and 1780 are right here. These are the ones we're looking at here. And we're also looking at the volume and open interest. And look at the numbers here. That's the reason that the bid and ask spread is so wide. $19.20 in 1870, that's a 50 cents of the difference between the bid and ask. But that's not the case with the S&P 500. When you're looking at the S&P 500, which is a mother of all products, it should be father of all products, but anyway, never mind that. And we're looking at the numbers 3870, and let me make sure that I pull up the right expiration here. So we want to look at the 21st. So obviously now we're looking at the September 21st, which is one day to the expiration, and we're specifically looking at the prices 3870 and 38 what do we have, 3870, 3875. So 3870, 3875, and let me push it over here so you will be able to see it better. This is a box that I want you to focus on. 3870, 3875, open interest. Look at these hundreds of contracts of activity. So no wonder the spread is only 20 cents wide. Between the 30-20 and 30-40, it's only 20 cents. How about here, between the 50 and 70? Okay, let's look at the put side because we're just about ready to finish the session. And on the put side, we were looking at the lower numbers, which is a 3870, what is it, 3850, 3850 and 3845. So let me now do this right here. These are the two that we're looking at on the put side for the volume and open interest. And look at this activity. In fact, I'm going to just focus on here on the bigger number. Look at that, 3850. Look at that, crazy. 4 digits. So you know that the market maker is eyeing 3850. So with the 2 minutes to go to the end of the session, what I would like to do is just show you one more time what the market is doing right now. It's actually going up. Sometimes the market needs to go up before it comes right back down, right? So obviously over here you have Apple still holding up like a champ. Tesla is still holding up like a champ. But I wouldn't be surprised if at the end of the day we didn't move even 1% up or down. Because look at the NASDAQ. All this activity on the NASDAQ, all this fear and this and that, it moved 0.2%, 0.6%, 0.76%, when in reality, and I'm finishing up the lesson here, when in reality, on the Fed days, if we just focus on the percentages, on the Fed days, NASDAQ can move either 3% or SM can move what? 2%, 1%, 2.5%. Do you see how NASDAQ is more volatile than actually S&P 500? But the NASDAQ is just a technology sector. Look at this one here. NASDAQ move 4%, while the S&P move only what? 2%. So what do we do today? So we looked at the Fed Day historical review. We started with the July, we moved to June, we moved to May, we moved to March, and we moved to January. We have concluded that when the Fed didn't do their job, which is control the inflation, the stock market construed that as a negative, and it has gone down on S&P 75 points. On the times when the Feds have actually jacked up the interest rate, which you can find by simply finding the Fed fund rate and going right here on this little symbol here that I'm putting the circle on, it's going to show you the graph. And when you click the graph, you would actually see when you hover over it, July, it wouldn't give the exact day. It would give the June, it would give the May, and it would give March because there was nothing in April. Those are the days that Feds did that job in a stock market that normally, in your logic, was supposed to go down, was rallying up. So, one thing that I want to end with is a one single sentence: economy is not the stock market, and stock market is not an economy. Have a good day, stay hedged, and see you at the next lesson. Bye bye.